Good afternoon. Welcome to MidCap Radar. I am Reema Tendulkar. With me, Sonal Bhutra, and these are the top stories that we're tracking at 1:30 p.m. Midcaps outperform larger peers even as indices seesaw. The street turns cautious ahead of the RBI policy meet. China reopening. China emerging from lockdown fires up metals and metal stocks.
Mahindra Holidays and MTAR Technologies surge in strong commentary. The management of Mahindra Holidays tells CNBC TV 18 the company will achieve its inventory target ahead of guidance. MTAR Tech reiterates guidance. It is confident of achieving revenue growth of 55 to 60% in FY23 and 50% for FY24.
Persistent system slumps after JP Morgan downgrades the stock to a neutral, saying it does not see any positive catalyst that can drive a re-rating. The brokerage believes mid-cap IT player is trading at a premium to peers.
November business updates drive big swings in mid-rung financials. M&M Financial hits a 52-week high as collection efficiency improves, while Angel slips after reporting a fall in client additions and market share.
Nearly 15% equity of Rainbow Children's Medicare is traded, while Go Fashion sees about 4% of its equity changing hands. Both the stocks trade soft post the transactions.
All right, those are the top headlines that we are tracking at this point in time. Well, for the markets, it's down 50 points. We did see some recovery around 12 p.m., but that has been sold into. So right now, Nifty is down 50 points. We have the mid-cap side of things, which are doing well. Bank Nifty is the one which is an outperformer today, up around 0.2%. And it's really a stock-specific day today. So a lot of stocks in the broader markets doing well. However, the advance decline ratio is in favor of the advances as we speak. So we'll keep tracking that. But Reema, the big cue this time around is, of course, the RBI policy. An expectation of a hike, but we'll have to see whether that's largely priced in our markets or not.
I know, we've been talking about it, right? We've had 3 consecutive 50 basis points rate hike, but after the latest inflation print came in sub 7%, the expectations have tapered down that perhaps this time, on the 7th of December, that's when the RBI policy will be announced, we could see a 30-35 basis points rate hike. But the other big cue will be the exit poll outcome, 5:30 p.m. For Gujarat as well as Himachal Pradesh. So that's something the street will be tracking. But this trend of mid-cap outperformance continues yet again. The advanced decline ratio is also positive. 3 stocks in the green for 2 in the red. This is our segment Mid-Cap Movers. Vivek is joining us to take us through the mid-caps that are moving around in trade. Vivek.
Well, good afternoon. Clearly, it's another day where you're seeing very strong performance as far as the broader end of the markets are concerned. And in fact, number of stocks hitting 52-week high, it's actually gradually increasing on a day-to-day basis. Today, some of the stocks that we're mentioning, while they've cooled off a little bit, all of them have been very strong. The recovery from recent lows have been very strong for the names that we are highlighting. So both Cochin Shipyard and Mazagon today at a fresh 52-week high. Mazagon has slipped a little bit. United Breweries, Iron Exchange, these stocks too today at a fresh 52-week high. Now moving on, select financials that we are looking at. So IDFC, IIFL Finance, DCB Bank, all of them today at a fresh 52-week high. DCP has taken a sharp knock just some time ago, and Kalyan Jewellers too today moving up on strong volumes to a fresh 52-week high. Looking at some of the stocks that have hit the volume buzzers, Sharda Cropchem today up almost 16%. India Terrain, both Sadbhav Infra and Sadbhav Engineering, the last couple of trading sessions have moved up on very strong volumes, and TD Power System continues to move higher in trade on strong volumes. On the other hand, some of the stocks that are taking a bit of a knock in today's trading session, Unichem Labs, this stock was down almost 7% on Friday and today continues its downfall. Ease My Trip, Gujarat Fluoro Tanks after the multiple block deals that happened, and Zomato too is cooling off quite significantly in today's trading session.
Okay, all right. Thank you, Vivek, for joining us and taking us through all the stocks which are in focus today. It's time to welcome Himanshu Gupta of Globe Capital for a technical check on the markets. Himanshu, good afternoon. Well, we did see a recovery at around 12 p.m. and we saw Nifty was up around 20 points. But now suddenly there has been a fall again. It has been quite volatile. What are the charts suggesting?
Very good afternoon to you. Well, I think after so-called third day of consolidation, the markets have recovered from the immediate expected area of demand, and from where we saw actually some buying coming in. And you rightly pointed that from last 30 minutes, we have seen markets giving up some of their gains that were captured after the week opening today. But if you look at the data, derivatives data today and the chart setup, I think sooner or later this weakness will again is likely to be bought into. And for me, Nifty is again a buy around 16,640, 650 odd levels, precisely around current spot levels. I think we can again see some second round of buying coming in as we approach towards the close of the day. Would you like to recommend a stop loss below 16,600 on the spot? And on the upside, I think there is a decent possibility that again the market might test the higher end of this consolidation band maybe in today's trade, post that exit poll numbers. And I think on the upside, 18,780, 18,800 Nifty spot is likely to be seen by tomorrow. On the other hand, Nifty Bank, that's again an outperformer and very, very strong data in today's trade. Very strong put writing compared to the call writers. And on the charts, I think 40,180, 43,180, 43,200 around the current levels. I would again be looking to go long with a stop loss below 43,050. And on the upside, I think 43,350, 43,400 kind of levels can be seen in Nifty Bank also. So for both the indices, for me, I think the current dip is a buying opportunity.
And individual stocks that you would recommend?
Well, sure. A couple of stocks giving strong breakouts today. Two on my radar. The first one is United Phosphorus, UPL. Much awaited breakout coming for the stock in today's trade. I think one can initiate longs around current levels. Keep a stop loss below 789, and on the upside targets close to 825, 830 can be seen in a day or two. That's the first one on the radar. Second one is DLF. Again, after a long consolidation, reality stocks have started to show signs of some strength. And DLF has also given a breakout in today's trade above that resistance zone of 410, 415 odd levels. So DLF can be bought for a target price of 430 in the near term, and a stop loss below 412 can be placed here as well.
Okay, all right. Thank you so much for joining us, taking us through those individual technical picks and the outlook on the markets as well. Let's do one thing. We'll slip into a short break now, and up next we'll be joined by Ravi Chawla, who is joining us to give a business update on Gulf Oil Lubricants. Stay tuned. Welcome back. Still tuned into MidCap Radar on CNBC TV 18. Gulf Oil Lubricants, that stock is on our radar. The lubricants maker saw a 250 basis points cut in margins in the first half of this financial year. Now, note the company launched a range of EV fluids for OEMs and has exclusive tie-ups with the likes of Piaggio Vehicles and Switch Mobility as well. It is also in focus amid volatile crude prices. Ravi Chawla, MD and CEO at the company, is joining us now to discuss the business outlook and a lot more there as well. Mr. Chawla, good afternoon. Thank you so much for joining us today. While we have seen some impact of margins in the first half, now things have started improving because crude oil prices have fallen sharply from the highs. They still remain around that $85 a barrel mark. But can you give us a sense of how raw material prices have panned and what will the outlook on margins be in that case?
Yeah, good afternoon. Well, you're right. The raw materials have stabilized. So we think that it's going to be quite stable now. Of course, the foreign exchange effect we saw it had hurt us in quarter two also. So we're hoping it will stabilize, and with demand conditions improving, where we have also seen volume growth in quarter two, and looking at now the season coming, I think it augurs well that we should be able to see a margin band going up in this quarter and in the second half.
What could be the margin band in the second half?
Well, we want to go step by step. So I think we're looking at a 12 to 14% and then possibly see how things stabilize. Of course, we'll have to wait and watch a lot of other elements like the exchange, because we import a lot of our base oil and additives. So I think hopefully we should see the positive trend in terms of margin going up.
This would compare with Q2 margins of 11%, right?
Yeah. So we want to go for the next band, which would be, taking it up by at least 1-2% the next quarter. And then hopefully our normal trajectory used to be 14-16. We'll have to see how we can do that. If fingers crossed, it should be, if things are stable and Forex is also stable, we should be able to look at that going forward.
Okay, take your point. Can you tell us something more about your EV fluids that you launched for 2 EV OEMs in the quarter gone by? You said 2 months since this has happened. What kind of contribution and demand have you seen here, and how big of an opportunity is it? When you entered this or started supplying this, some sort of revenue number that you looked at or market opportunity?
EV fluids, as you know, it's happening all over the world. We have a global range. So as the OEMs bring in EV products here, we are obviously there with their offering. The product is slightly different from lubricants. It has certain enhanced capabilities. So these are, I would say, seeding operations now. they're not going to be very big because the production will obviously pick up in years to come. So as a future, yes, EV fluids are there. We are developing all the products. We have it. But right now, it's really small numbers, but happy to have Piaggio and Switch with us. And we're also talking to a few more OEMs. So this would be, I think, a seeding kind of thing, not very high in terms of revenue, but definitely we have the portfolio which can meet the EV needs, both for cars, two-wheelers, buses, three-wheelers. So that's really where we want to look at the future growth in this.
But you would be making a lot of investments to develop these EV fluids while the monetization is not immediate, right? So would you say that the margins today are depressed because of the kind of investments, R&D that you need to spend?
Well, you see, the products are being used all over the globe. We have a global R&D already has these products available for other markets in the Western world. So yes, those investments come in we work along with the chemical additive companies. We work with the OEMs. So I think these are ongoing projects and definitely a focus area for us. So you're right, the factory fill, obviously, we do want to seed the things. And then as and when the market grows, we'll be able to look at our investments. But this is exactly what the strategy is to come up with these advanced fluids, including synthetics and others which are in the core lubes, which are also growing. So core lubes is also growing, is going to continue growing for the next 10, 15 years. So it's, I would say both these products, the core lubes and the EV fluids, we have a focus on that.
Okay, so you briefly mentioned synthetics. Last time when we had spoken to you, you said it's contributing in single digits. But now since it's a growth driver, what kind of growth are you seeing here? And say 2 years down the line, how much will synthetics and EV fluids or the new products that you're entering into contribute to the overall revenue pie?
Well, you're right. Last time we spoke about synthetics. So synthetics in the passenger car segment, we're happy to share that we've had a very good growth. For example, we've grown our core lubes by 10%, but for our passenger car, it's nearly 3 times that. And that's where some of the synthetics and semi-synthetics come in. So we are hoping that with the passenger car and some of the high-end motorcycle and other synthetics in industrial, we can take it to double digit in 2 to 3 years from now. Currently, as you said, it's low single digit.
What's the overall volume growth that you've seen in the month of October and November?
Well, October, November, we'll have to wait for the quarter results, but definitely we are seeing a good uptick in terms of volume. And July, August, September generally tends to be slightly low. Even then, we grew by 10% because of the monsoons. As I mentioned earlier, we had in some of my other interactions, we did see some stress in the agri segment and motorcycle, which I think is slightly easing up. But hopefully, fingers crossed, this quarter would also continue the volume growth. And as Gulf has been always growing 2 to 3x the market growth, I'm hoping the market growth will at least be about 2 to 3%, slightly more in this quarter, which is a good season in terms of consumption.
Okay. And what about the market share gains that you've spoken about? The company has been gaining market share every quarter. If you can give us a cumulative number as to how much of a market share gain have you seen already? And what is the number of distribution points right now? Will you be increasing that number as well?
You see, coming to distribution, last 2-3 years, a lot of the outlets became dormant, the garages, and because of various closures and all. So we are definitely focused on increasing our distribution because our brand strength is quite high. We believe we are amongst the top 3 brands in terms of brand consideration, brand awareness. So we want to increase our touch points, which was 75,000 to 15% every half yearly kind of figure. So that's where our trajectory is. And in terms of market share, we've been growing. Our volumes have grown 20% H1 and 10% core lube volumes in quarter 2. So market, we believe, is growing 2-3% or slightly more, but we've been growing 2 to 3x that. So market share gain overall has been continuing for us, by, I would say, adding about 0.3, 0.4% market share in the segments we play in.
Okay, 0.3 to 0.4% market share addition. Last question before we let you go, Mr. Chawla. You spoke about around 40 crore investments in the EV space earlier. Any more investments that you're planning, considering that this is a growing segment?
Well, the board, and we are looking at various areas in the EV value chain. We are looking at options. We have invested in a charging company, Indra, which is UK-based, and in software as a service company. So at the moment, we are working with them as strategic partners, doing some of the tests here. And we will be talking to a few more areas. And once the board is clear, I'm sure we'll come back to you with some news on that.
All right, Mr. Chawla, thank you so much for joining us, taking us through the business outlook and what's happening on ground as well. That's the word coming in from Gulf Oil Lubricants. Some moderation in raw material prices, and that's the reason why margins are expected to get better from here on as well. We'll slip into a short break now, get you more on the markets and stock-specific action on the other side. Stay tuned. Welcome back. You're still tuned into MidCap Radar on CNBC TV 18. Well, technology names that definitely in focus today. We got the persistent downgrade, and there is a note from Nomura as well on the tech sector as well. Rima, tell us more details. What is the outlook from this note?
Well, so what Nomura has done is that they've identified some 1,000 companies, right? So usually these large enterprises are clients of the IT companies. So out of the global 2,000 top companies, they've saying we've studied 1,000 of them. And we've analyzed that the revenue outlook, the revenue estimates are actually coming down every 6 months. So let that chart come up for you. So for technology, in the month of May, the technology companies were anticipating a near 10% growth next year. Now they're only expecting a 4% growth. BFSI, which is a very large contributor, BFSI would contribute 30-35% to the IT companies. BFSI clients would largely be expecting a 6% revenue growth. Now they're saying that revenue growth for them perhaps will be negative. Now, the tech spend is always a function of your revenue. If the revenue growth estimates itself are coming down compared to what the companies themselves anticipated at the beginning of year, that means tech spends are likely to be much lower than what we anticipated, right? Demand is likely to slow down. In fact, that's the reason why Nomura says the Indian IT companies' top line growth was closer to 12.7% this year, will come down to 8% next year. And where is it that we're going to see the maximum hit? Companies with a greater exposure to consulting, because that's a discretionary spend, so something like Wipro, and companies which have a greater exposure to Europe, because that's affected area. So that would be something like TCS. So that's point number one. That said, the IT sector valuations have moderated significantly. So if earlier they were trading at an X premium to the broader markets, they're still trading at a premium, but that quantum of premium has come down. But given that the sector still faces headwinds, it is necessary for people to be stock selective when it comes to buying IT names. So their top picks are Infosys in the large cap space, Persistent in the mid cap space, and they have a reduced call on TCS. So while JP Morgan has downgraded Persistent, Nomura still has Persistent as its top mid cap pick.
Different opinions is what makes market, right? So that's what the opinion here is. But with that, we'll move on. And on the sidelines of the Indian Banks Association's annual Banking Technology Conference and Awards, our colleague Sandhya spoke to Sanjeev Chadda, who's the MD and CEO of Bank of Baroda, about the reach of digital banking and the importance of keeping up with technology-based changes. Listen in.
The pace of change in banking is much, much faster than that, right? It's not going to wait for 30 years for things to change. Even within the last 2 or 3 years, how we do banking has changed beyond recognition. And therefore, to my mind, unless banks are able to adapt to this pace of change, they may either be outcompeted by non-banks or again, those players within the banking system who are able to actually move faster. Therefore, in terms of possible disruption, the disruption could be of the industry or within the industry.
So you also spoke about, stability, agility, all these, aspects of technology. So if you can elaborate a little bit more on that.
So I think there are 2 or 3 pieces which come in. So I spoke about the fact that stability is important because more and more of what you do is now connected to technology. Earlier on, if there were a mishap in one particular branch, it impacted only that particular branch. But now with all your operations, a large majority of your transactions linked to almost a single interface, which is through the mobile phone, should there be any disruption, that will have catastrophic impact. Therefore, operational resilience and stability becomes very important for the sake of customer service, for the reputation of the bank, and also for retaining the confidence of the regulator. The other part again is agility. Because of the fact that the pace of change is such, you need to make sure that your time to market is much shorter as compared to what it was earlier. Right? And the third thing again we need to look at is in terms of optionality. You do not know what the future is going to be. And therefore you need to be prepared for outcomes which are diametrically opposite. If things were to go one way, which you are preparing for, you should be prepared for that. But if your assumptions also don't come true, you should have the organization ability to change that also. So I think all these 3 aspects, agility, stability, and optionality are fundamentally important. Actually, this is something which I read in the context of central banking. There was an article by Mohammed Al-Arian, but to my mind, it applies to banks and to technology equally.
So you also spoke about a massive shift in the last 6 months when it comes to Bank of Baroda. So if you can help us understand with the help of few numbers that what exactly is the extent we are talking about when it comes to the transitioning.
So I think I spoke about the fact that, look, when we grew up, we always used to think of banks as branches. But we implemented Bob World as a mobile banking app about 1 year back. Within a year, we have something like 25 million customers. And then one fine day, I was shocked to know that actually 5 times as many customers visit Bob World has come to 8,000 branches. Now that means that all your assumptions around which you had built your bank suddenly change. It means that you need to possibly redesign your entire network, the entire bank around the mobile banking channel, right? So those are really moments of truth, which again make you pause and to see that are you moving in the right direction and what is the direction which you need to move in the future.
Okay, that's the word coming in from Bank of Baroda. Keep your eye on a couple of these names. Satin Credit Care. The stock has had a fantastic move. Today it's up close to about 8.3%. In fact, the stock has been rising for the last couple of days, 5 days to be precise, and it's also trading above all its moving averages. DCB is another stock. There was a sudden collapse in the stock about 20 minutes ago. Since then, it's trying to find its feet, but DCB Bank is down close to about 3% and pull up a 6-month chart in DCB Bank, you would see the stock has been quite the outperformer. And as a sector per se, it's a lot about metals. So metals continue to dominate the big, gainer screen, whether it's Tata Steel, JSW Steel, outside of the index, SAIL, NALCO. This is on the back of hopes that China reopens, demand is going to pick up, and it's also a sector which is relatively under-owned. So that provides its tailwind. With that, we're out of time on MidCap Radar, but we've got Inside Out on the other side.
Yes.